Paul, Ryan, REA has launched its new house price index. Some of the numbers are quite different to CoreLogic's. Why is that?
So the PropTrack Home Price Index is a new index that we've released, and it's the only index that's both timely, we're releasing it on a monthly basis, revisionary, so we're updating all of the numbers every month, and it's compositionally adjusted. In March, we saw prices across Australia continue to grow, but at a slower pace than we've seen over the past year. So we saw Adelaide actually top the numbers in March. Now both Adelaide and Brisbane, which we saw high growth in, have benefited from those preference shifts we've seen following the pandemic towards lifestyle locations, larger dwellings, and of course they've both benefited from relative affordability across the capitals. So we're clearly seeing a slowing in the rate of housing price growth across Australia.
It's also pretty clear that the two biggest markets, Sydney and Melbourne, are coming off the boil. Where do you see prices in those two biggest markets heading over the next year?
They started to slow towards the middle of last year. I think the key thing that's driving that slowing is two things. Firstly, affordability pressures. The median price in Sydney for houses, for instance, is now over $1.2 million. But the second thing that I think is driving the slowdown in prices across the country is expectations of high interest rates. I think buyers are already incorporating expectations that the Reserve Bank will increase interest rates later in the year. And indeed, we've already seen mortgage rates start to drift up.
Of course, it is a country of two markets. We've still got some growth happening in the smaller capitals as well as regional areas. Do you think that divergence between the two ends of the market is going to get bigger?
Markets like Adelaide and Brisbane are continuing to grow reasonably solidly, and again, that's because they have both relative affordability, prices are lower in those capitals, but also with increased work from home flexibility, more people are able to access those markets. We're seeing that trend continue. So for instance, regional markets also are benefiting from those same trends, and all the regional centres outperformed their capitals in March. So those trends are likely to continue. We're still seeing big migration flows from the south of the country north into Queensland, but there's still that overriding slowing across the whole market because everyone's affected by those increasing interest rates that we're expecting to see later in the year.
And with those increasing rates, we know that they're at first expected to be fairly modest increases. Do you see the impact being the same across the different markets?
So interest rates are likely to affect all markets pretty similarly, but they're all starting from a different place. So for instance, Perth went into kind of the COVID pandemic as quite a weak market, and now we're seeing that it's kind of returning to that state. Whereas we saw that Brisbane was performing quite well before that kind of 2020-2021 period. So while interest rates will have a broad-based effect across all housing markets across the country, those preference shifts that we're still seeing towards regional areas, towards smaller capitals, are likely to mean that those areas, Brisbane, Adelaide, Southeast Queensland in general, are likely to continue to outperform the larger capitals such as Sydney and Melbourne.
Where do you see interest rates ultimately settling and when?
So expectations for interest rate increases are very sharp. Particularly market expectations have interest rates rising quite quickly later in this year. Bank economists are kind of less bullish on interest rates, but still see interest rates going up very sharply. Now, the outlook for home prices are very tightly linked to those outlook for interest rate increases. It ultimately depends on the Reserve Bank's assessment on how persistent the inflationary pressures we're seeing in the economy are. But if it does come to pass that interest rates increase as quickly as both bank economists as well as the market are expecting, that will be a big slowdown on housing price growth, and prices are likely to remain moderate for some time to come.
Paul, the Coalition announced an extension of the first home buyer guarantee this week in its budget. What's your advice to people considering utilising the scheme?
That scheme, while it was extended, there's a cap on the number of places in kind of those schemes. It's about 50,000 places across the year. That was about a third of the number of first home buyers we saw enter the market over the past year. So it's likely to be helpful for a big segment of that first home buyer market. Now, with prices slowing, obviously that is a positive for first home buyers getting into the market, but they should obviously consider that interest rates are likely to go up, and they should build into their budgets the prospect of higher mortgage repayments later in the year and potentially significantly higher.
The pandemic isn't over. Epidemiologists expect new variants will continue to disrupt. We've seen consumer confidence pull back. We have an election on our doorstep. How are these factors going to impact the housing market throughout the rest of this year?
People are making decisions about investments that will last a long time. People stay in homes for 7 to 10 years. So naturally, people are likely to stay on the sidelines when there's a lot of uncertainty. And we've seen that over the past couple of years. So the number of people listing homes has been lower. Now, that trend has started to reverse. The market has kind of normalized somewhat in 2022 so far, but that's not to say that that will continue.
If there is a change in government, what will that do for property prices?
So we've had both the government's budget as well as the opposition's budget reply. Neither have proposed policies that are likely to have a huge impact on the housing market per se. Obviously, the strength of the economy, whether that be a Liberal government or a Labor government, as well as the response to economic conditions from the RBA, have an impact on the housing market. I don't think people are watching federal government policy, though. I think all eyes are on the RBA for both when interest rates increase and, crucially, just how quickly interest rates increase. That's the kind of first order impact on the outlook for housing prices over 2022.
Paul Ryan, thanks for your time.
Thank you very much for having me.